Okay, everyone, hope you're doing well. This is the video lecture for Chapter 3. The topic is professional ethics. You know, this is a challenging topic in some ways because if you teach it from a moral philosophy standpoint, which, by the way, I think is a very interesting field, very interesting subject, then we start getting into to what extent your view of morality impacts your behavior as a professional accountant. And that's one way to teach ethics. I have found that much of the time students' morality is largely set, or it's fixed enough to where us having a topic on ethics is probably not going to change it. And there are different moral philosophies that can impact how you consider certain actions, and again, those are all good. Those are probably good for you as individuals to wrestle with. I'm probably going to take a little bit different approach, which is I'm going to talk about behavior that is expected as a professional accountant, and I'll talk about consequences to violating those behaviors, and we'll talk about ways in which the profession has tried to implement some of its rules around ethical behavior. So that's at least my plan. There's a little red dot for you. That's my plan as far as how we're going to address it. So if you look at the priorities of the learning objectives and their priorities, notice that we're largely going to be focused on independence. Also talk a little bit about the conceptual framework and kind of what's the purpose behind the profession's need to establish professional ethics. So if we look at the nature of ethics and ethical dilemmas, this is on the lower side, partly because this is a question that's hard for us to answer in a satisfactory way in this class. You really can have a whole class, really a whole series of classes on the nature of ethics, right? So again, we're not going to focus as much on that. There's a set of steps that are talked about for resolving ethical dilemmas, but honestly, if you look at these steps, this is really steps to resolve any dilemma, right? Any problem solving essentially follows these 5 steps. Identify the problem, think about the different options that I have in terms of what to do, what are the constraints I have in terms of either the outcome, constraints on the outcome, or constraints on what I can do, what are the consequences of the different actions I can take, and then take the best one, right? Now obviously the nature of ethics gets into what do you consider the consequences of the different courses of action and how to select the best course of action, right? So what does your optimization function look like? What do you value? What's your utility function look like? Do you value your own personal satisfaction over the personal satisfaction of others? Do you value some sense of equality in terms of outcomes? Do you have a sense of justice, right? That's where really the moral philosophy and the different theories around how to make choices comes in. And again, that's something that I'm not going to be able to impart into you in one section of the class, one topic of the class, and so we're not going to spend much time on it, even though I think it's something you need to wrestle with, and you are wrestling with it, and we've, as a society, have to wrestle with it. The key for something like this, because this is a painfully obvious set of steps, the key is just making sure you slow down to analyze the issue, right? You stop, you think about it, you work through these steps in a thoughtful and rigorous way, right? That's really the value in it. It's not in what are the 5 steps, it's let me just stop and let me just think through this issue. All right, so here's an example of an ethical dilemma where you have a student who's interviewing for a job with multiple companies in the same city. He incurs a set of expenses that are basically for the trip, and his temptation is to ask for reimbursement from both companies, right? So again, the value there is in analyzing those steps, walking through the different options, and thinking about the consequences. Right? I mean, at the end of the day, this one is, well, what are the chances you might get caught? Right? They find out that you submitted it to both companies, and then what could happen then? What are the consequences related to you having to look yourself in the mirror every day and knowing that you likely cheated these companies out of some amount of reimbursement? And so, right, again, that's something that you'd have to sit through and analyze. I mean, another example that you're going to be faced with if you go to public accounting is your time, reporting your time, how you spend your time, right? So all the firms have ways in which you account for your time, but they're essentially the same. How many hours do you get to bill to a client or different clients for your time throughout the week or 2 weeks? How much time is spent on professional development? And so you're going to be tempted at times, especially when it's slow and you don't have a lot of billable hours, either one, kind of increasing those hours, right, even though you didn't really work them on a given project, just so you can make your time look better, or are there professional development codes you can hit to say that you were doing training or learning about different methods or reading up on the industry or whatever it is. And so that's a dilemma you're going to have to face, right, if you go to public accounting. And how do you go about making those choices? The second learning objective is around what's the reason for these ethics. So they really kind of relate to why we have a profession in the first place. So this list was at least inspired by a sociologist that I read some years ago. And ultimately you have a responsibility to serve the public. All the professions kind of share that in common. For us, the CPA is meant to represent the public. Now, we get paid by our clients, right? We're trying to help the users, but ultimately we're trying to serve the public by providing a useful service, right? Reducing information asymmetry is a useful service. It's valuable, all right? It allows markets to function. It helps the allocation of goods and services, right? So this is important. Another characteristic of a profession is you have a complex body of knowledge, right? So this is true for doctors, dentists, lawyers, accountants, right? In our case, we have a lot of standards, standard updates, interpretations, a lot of guidance that's out there, right? There's a lot of information, and the point there is that helps build our competence, right? The more we know about that body of knowledge, the higher our level of competence. There's also barriers to entry or standards to admission. You say them the same way, but we don't want anyone to be able to say they're a CPA, right? If we do, then it dilutes the brand of CPA. And so we have minimum standards. All the states have these standards for what it takes to be a CPA, for example. And those standards may vary a little bit, but they have a lot of similarities in terms of a certain amount of education, passing the CPA exam, a certain amount of professional experience. And so, again, some people may see that as, oh, you're just trying to keep people out. Well, we're trying to ensure that the people that get in meet a minimum threshold in order to make sure that our profession stays viable and has a good reputation. Lastly is the need for public confidence. Ultimately, the product we're selling is credibility, whether as preparers, CPAs within a firm to prepare financial information, we want that to be credible, or as auditors coming in trying to provide assurance that that information is credible, right? So ultimately our product's credibility, and if the public loses confidence in that credibility, then all of a sudden our services, the value of our services goes way down. So the Professional Conduct Code, ultimately the purpose of it is to give guidance for how you execute and carry out your professional responsibilities. There's different levels of the code. If you look at this graphic, it kind of helps you get a sense of it. The principles of the overall framework in which the code is established on. So if I was going to redo this figure, this is from the book, but if I was going to redo it, I would actually put the principles on the bottom layer because they're the foundation, right? That's the framework, that's kind of the base. And then the rules are derived from those principles. They kind of help be more specific, more concrete, kind of lay out in an enforceable way what we expect. And then interpretations help make sure that any gaps in the rules, that there is some documentation in order to recognize that, hey, we have a specific rule, it didn't address this area, but here's how we would interpret that rule, right, for this situation. So the goal is ultimately to try and help guide professional conduct. And there's different parts of it. Members in public practice, so like public accounting firms, members in business that are actually preparers, and then kind of other members. Okay. So the principles section then, basically there are these 6 principles. We'll talk about these at different points in time, so I don't want to spend much time here. As far as these are kind of what underlie, the responsibilities, what we're expected to do. It lays out a section about how we serve the public interest, talks about how integrity is important for executing our professional duties. It talks about the importance of being objective and having independence. It talks about how you exercise due care in terms of making sure that you're following kind of best practices, following the guidance to make sure that you're doing your job well. And then kind of lays out kind of the different scope and nature of services that would fall under your part, whether it's as an auditor or a preparer or something else. So if we look at this overall conceptual framework, right, the purpose here is to address situations not directly included in the professional conduct code. So some kind of the focus that it's basically saying, okay, our overall purpose is to provide credibility, right? And so we want to prepare information in a credible way. We want to provide assurance services that enhance credibility of information. So what are the threats to that? And what are some safeguards that can be put in place to offset those threats? Okay, and so if we talk about the threats, the things in bold here, those are the threats, and then examples are given of those threats. Okay, voila. Unfortunately, my tablet didn't work for me to write this out, so I had to write this with a mouse and so that was a little kind of some poor writing there, but anyway, you get what I was trying to do. So the threats are on the left hand side, and then examples of the threats are on the right. So let's look at these. An adverse interest, well, that means you're having an interest against the client. So an example will be, let's say the audit last year, basically there were some errors found by an outside party. Maybe the client was sued, and now the client is suing the CPA firm for not catching the problems, right? So maybe the board of directors is suing the CPA firm. Well, there's an adverse interest there, right? You have an interest against the client now because of this lawsuit. So that would be a threat against your ability to be independent and do a good job. An advocacy threat is kind of the opposite. So now, instead of you being against the client, now you're for the client. So your example is endorsing a client's product. Well, so now that also impacts your independence, because now you're being an advocate for the client as opposed to an advocate for the shareholders. Familiarity. So you have an example of a close friend being employed by the client, or the other example would be the auditor tenure. If the auditor tenure gets very long, and let's say the partner on that client, let's say it's a privately traded company or private company, the partner on the audit has been there for a long time, has been doing that audit for a long time, they may become very familiar, and therefore that is considered a potential threat to your ability to be independent. Right? You're less likely to criticize a close friend, for example, than you are someone you don't know as well. Management participation, so that's when the CPA is participating in transactions, right, in running the business, and so they're authorizing a client transaction let's say, for example, the client wants to install a new ERP system, which, the accounting information system is a major part of that. And so if the CPA authorizes it, now all of a sudden they're participating in running the business, and that impacts your ability to be objective. Self-interest is another threat. So the CPA, for example, owns some stock in the client, individual stock in the client, right? And the argument there, and we'll address this later, but the argument there is that now you have an interest in making sure, for example, that stock price stays high, so you don't want to put out any bad information about the company, right? And so that's an example of self-interest. Self-review, let's say you're helping make some of the accounting decisions, like which accounting method to use for inventory valuation. If you're making that decision, then part of a job of an auditor is to review changes in accounting methods, right? And so it would be hard for you to be able to do that objectively. Then lastly, this undue influence, let's say it's a privately traded firm again, and managers are really kind of the ones who are hiring and firing the auditor, then that's going to be difficult for you to be objective, because you're worried if you push too hard on the client, for example, to make some changes in the financial statements, that they're going to go ahead and fire you, right? And that would be a problem of undue influence. So how do we protect against those threats? Well, we have a set of safeguards, right? Some of those are created by the profession, some of those are through legislation, some of those are through regulation. So for example, continuing education requirements for independence and ethics. So you're going to have to do continuing ed to maintain your CPA license, and so some of that every year might have to be around ethics, right? And so that's a safeguard. So it's trying to highlight problems and help train you to where you can recognize these threats a little more easily. Some safeguards are implemented by the client, in the sense of the client's tone at the top, the board of directors, right, in terms of who they're appointing as CEO or CFO, the culture, right, some of the internal controls we'll talk about later, having an audit committee that hires the auditor instead of allowing management to do it. Those are some examples. And then we can also have safeguards that are implemented by the firm, right? So one example will be around making sure that there's quality control procedures that help make sure that each engagement is being performed according to the professional standards that are relevant for that engagement. All right, so then looking at kind of a graphical way of thinking about, do we need to fall back on the framework? So we have an issue that comes up, and we'll look at some examples actually in our synchronous class sessions, or in our class sessions rather. And so let's say we have an example an issue that comes up. Does the code directly address it, right? If so, then it's kind of obvious what you do. You have to follow the requirements laid out in the code. If not, then we ask the question, does the relationship create any of these threats that we talked about before, right? Advocacy threat, adverse interest, all these different threats. And if the answer is no, then okay, we can go ahead and provide the service. Good stuff. If the answer is yes, then we're asking the question of, do we have some safeguards that can reduce the risk of non-compliance to where we're okay with it, right? If the answer is yes, we do have some safeguards in place, then go ahead and provide the service. If not, then you can't provide the service, right? So this is just a general framework for trying to address issues that we, in terms of, some of them we'll be able to find that are laid out specifically in the Code of Conduct, but others we go through this two-step process. Are there threats to compliance with the code, and then are there adequate safeguards or not, right? That's essentially what this graphic is saying. Okay, and then the last part of this learning objective is looking at the rules. And so there's a whole set of rules here that are laying out specific, prescribed rules for each of these areas. I'm not going to go through each of these, but these are rules that would you would go to when you're trying to say, okay, well, is there an issue around contingency fees, right? Let's go and look at the rules in the code of conduct to see what they say about contingency fees. And a lot of times, if you're doing an assurance engagement, you cannot collect contingency fees based on some outcome, right? It has to be a flat fee that you charge as the auditor rather than some contingency fee. Okay, so you would look in these different areas for the specific rules to see if they're addressed by the code.